Welcome back to the Money Show on ET Now, and let's keep it going with all your portfolio-related queries. And viewers, as we know that there are plethora of funds available in the market where you wish to invest your hard-earned money, but how do you assess that which is the right fund for your portfolio? What are the criteria that you should be looking at to help you navigate through this maze? We are being joined by Anil Rigo, founder and CEO at Right Horizons, and do not forget to send us your portfolio queries on a WhatsApp number, that is 865-797-4571, or you can also email us your queries on themoneyshow@etnow.tv. So let's get started. And Anil, first of all, a very good evening to you. And the first query that I have is coming from Ashwin from Belgaum. And Ashwin says that he's 35 years in age with an annual package of 7 lakhs. His expenses is 2.5 lakhs, and he is already saving in some of the schemes like EPF, PPF and PLI for 1.7 lakhs per year. Health insurance for himself as well as his spouse is another 13,000 a year, and current liability is 3 lakhs, wherein 84,000 per year is the loan EMI. He's new to the mutual funds and last month started the SIP of 5,000 per month for the next 5 years. His portfolio is 1,000 rupees SIP each in the funds that is on the screens. I guess there are a lot of names that are there. In his portfolio is diversified enough or need to add more funds to the current portfolio? What will be your advice, Ashwin?
Yes, so first of all, I think it's good that he started early and beginning to invest, okay? And also started off his journey on the mutual fund side. It definitely makes sense to increase the SIPs. He suggested about a 5,000, maybe you can even do a little higher than that, and that will help him also grow in line with inflation, right? And to build a portfolio for himself. He's not mentioned future goals, so we cannot discuss about that. Uh, but definitely, increasing the SIP will help him achieve that. In terms of funds that he has, I think right from Nippon India Growth, okay, it's a hold. It is a good aggressive fund on the mid cap space, so he can be invested. Similarly, he has a aggressive hybrid in ICICI through equity and debt fund, and it's been a good long-term performer. SBI Contra is another value-oriented fund, and it makes sense to stay invested. It will deliver good returns, in the past. And he also has a small cap in ICICI through small cap fund. So I think in terms of all the funds that he had, he has done a reasonable job in choosing the right fund. Uh, Basically, he could look at complementing it when he's adding his new funds in possibly a large cap fund, and a large cap fund like either an ICICI Pru Blue Chip and an HDFC Top 100, especially since he's a little early in his journey, right? And it may make sense to keep it, sort of the large cap side. The other is he can also complement it again by having something like a HDFC multi-cap fund. So that is the multi-cap category that he can sort of add in, and I think he will go and build a good portfolio for himself in the long term.
Okay, thank you so much, Anil, for that advice for Ashwin. But with this, let's move on to the next caller then. And Anil, we have a live caller named P. Shri B. Shri Harikant. Very good evening, Harikant, and thank you so much for calling to ET Now. We have Anil online. Please go ahead and ask your query.
Yeah, this is Sri Harikant. Actually, I already invested 30,000 through SIP. I want to add 5,000 for SIP actually. So I need advice. I shared my portfolio also.
Okay. Yes, you did send us your portfolios, and we could see that there are 4 funds as of now named PPFAS, FlexiCap, Kotak Emerging Equity, Axis Small Cap, and Canara Robeco. So,
Correct.
So, Mr. Harikant, what's your question to Anil then?
Another 5,000 rupees SIP. So what type of fund I choose maybe?
Okay. Anil, he is looking to invest another 5,000. He's already invested in 4 schemes as of now. So, what fund he should go ahead and put his money in?
Yeah, definitely. So first of all, on the schemes that he has, I think he has reasonably good schemes. He has a combination of flexi cap. He has a bit of a mid cap, small caps. He has slightly, he has 2 small cap funds and 1 mid cap fund. So I think again, he can look at enhanced large caps, okay, because that is something that he doesn't have right now. Yes, in the short term, maybe mid and small caps will do better. But one believes that slowly it's the large caps and mid caps run in cycles. So this is the time he'll be investing in some of the large cap funds when they are relatively not moved up as much as the mid and small caps. So it may be a good thing to also add it to his portfolio, and then so we'll have a reasonably good allocation. I say for blue chip, or he can look at even if he wants to add to the mid cap, considering that he has the uh, um, small caps, 2 of them. Then you can do a, let's say, Nippon India Growth Fund, or let's say an SBI Magnum Mid Cap Fund. And I think he's done a good job, and probably some bit of this addition will also help him grow his portfolio better.
Okay, Mr. Harikant, I hope that this resolves your query. Any further questions for Anil then?
Thank you.
Okay. Thank you so much for calling us. And with this, let's move on to the third query, Anil. And this is an email query that has come from Ramesh from Chennai. And he says that he's investing in Nippon India Nifty 50 index fund and paying rupees 5,000 per year. He needs that. What's your take on this particular index fund? And should he continue with this 5,000 investment?
So he needs to keep in mind that an index fund is what we call as a passive fund, and sort of the passive fund tries to replicate the Nifty 50, okay, in this particular scheme. And the objective of the fund is to deliver returns in line with the index, and something which is poorer, better performer. Both of them are not considered good when you're looking at index fund, because they, the tracking error is what people look at. Uh, and hence you need to keep in mind that you will be in line with all the other index funds, as well as in line with the index itself. Now it's important to see whether you want to do a passive fund or an active fund. A passive fund will give you comfort that it's closer to the index. It's probably a risk that is known, okay, and lower fund management costs as well. However, if you look at in the medium to long term, there are funds which have done very well, the active funds, and they've delivered much higher returns net of fees. So yes, if you're looking at a portfolio of funds and this is one of it, you can continue. But if it's one of your primary funds, then I would suggest you again move to a large cap fund which is actively managed. And if you see the returns, let's say of an ICICI blue chip that I just mentioned, right, versus let's say the index, there's a substantial difference in performance. So that is one thing that you keep in mind, and accordingly invest.
Okay, Anil, with this, we'll let you go on that. Thank you so much for joining us today and helping all our viewers resolve their portfolio-related queries. But with this, viewers, it's time to bid you goodbye as well from me and the entire team who put this show together. Thank you so much for watching, and as we leave you, wishing you a Merry Christmas from the whole ET Now team. Thank you so much for watching.